Welcome back to Shukmar classes. The topic today I am covering is financial statements of companies. Under this financial statement of the company, the subtopic which I am covering is statement of profit or loss. This statement of profit or loss is prepared to find the net profit or net loss of the concern, and the format which I am going to prepare as per the Companies Act 2013 as per schedule 3. This is the most important. As per schedule 3 of Companies Act of 2013, and this is the very common topic for second PUC, second Bcom third sem, second BBA third sem, fifth sem IFRS. So this is the most important topic which we are covering in this. And even for the person, those who are not studying into the college and those who are working into the corporate sectors, even for them also this is the very common topic they need to learn in this, because working out of the company final accounts, this is the vertical format. Once upon a time we were following the horizontal format. Now we are following the vertical format. Now already, to save the time, I have made little format in this, but we are going to follow certain procedures by writing on spot particulars. This column is called as note number and this column is called as rupees. The very first one is serial number 1, revenue from operation. For your understanding purpose, this revenue from operation, I will write it for your understanding purpose, it is the sales. And to make this problem also, it is very easy. I'll try to write amount on imaginary figures, and this explanation I'll give it into the next page. And revenue from operation is over. The second one is the other incomes. Other incomes. Let me write here 150,000. So overall I get a total is 3,50,000. This 3,50,000 is called as the total revenue. How you get this total revenue? Roman number 1 plus Roman number 2. We call it as Roman number 3. I hope so that I have made it as very easy to make you understand. Revenue from operation, other incomes. What is this revenue from operation? Sales. What is this other incomes? This other income is, for example, profit on sale of asset. For understanding purpose, I will write it here, but actually these are the entries will not appear here. Since this is the explanation, so again I will write it here. What are these other incomes? One, it is profit on sale of assets or interest received on investment or discount received, like that, which is not on the operating activities, which is other than operating activities. So in case if all these entries are given separately, we have to maintain a separate calculations like this. For example, I'll write here other incomes. Other incomes. In this other incomes, I can write it is the profit on sale of assets, some amount. Next one is the interest received on investments, like that. I should add it and bring it. For example, let me show 130,000 and 20,000 total I get here, it is 50,000. If I give the note number 1, In this note number 1, I will mark it here. How this 50,000 has arrived? This 50,000 has arrived because of some calculations which has been made into the note number 1, which is I have given it is into the after this income statement. This is the concept, you must know that. Now coming to like that, next heading is going to be expenses. Now all incomes it is over. Coming to next one is the expenses. These expenses we are going to write it is the 9 different expenses. First one is the cost of materials consumed. Second one is the purchase of stock in trade. We cannot expect in a problem all the entries will be given. Very few entries will be given. Or else let me take it is for understanding purpose 10,000, 20,000. Third one is changes in inventories. This let me show how that note will appear. For example, I'll write here 30,000. How this 30,000 has arrived? Let me show it into the working note. Please see here. Changes in inventories. For example, I'll take it as note number 2. Why I'll take it as note number 2? Because already note number 1 I have shown that other incomes. Now, changes in inventories refers to opening stock minus closing stock. For example, opening stock is 70,000, closing stock is 40,000. I get the balance is 30,000. This is called as changes in inventories. This 30,000 only I am showing into the changes in inventories. How this changes in inventories has arise? You see note number 2 into the following the tables. Next coming to after this point number 3 under Roman number 4, the fourth one is the employees benefit expenses. What is this employee benefit expenses? Once again I will show it into the note. You see that note number 3. What are the benefit of employees? One, it is salary 10,000, wages 5,000, provident fund 5,000, staff welfare expenses 5,000, encashment of leave salary, 5,000, 10, 15, 20, 25, 30,000. This 30,000 of note number 3 I will write here. Note number 3, 30,000. Now employee benefit expenses 30,000. How you got? Go to note number 3 and what are the other entries are there. Now you see I am showing the format along with imaginary figure with how that entries will appear with working note, so that it will be a little lengthy video, so that in this single video only you can understand everything. Serial number 5, finance cost. What is this finance cost? Let me show it in backside. You see that finance cost is very simple to understand. Interest. For example, maximum as per this chapter you will get interest on debentures, bank loan or any other loans, but finance cost means what it is? Interest. For example, let me write here 10,000. For this I will give note number it is 4. Note number it is 4. Now let us see here finance cost, note number 4, 10,000 rupees. And after fifth point, we can write here, it is the sixth point, it is the depreciation and amortization. Depreciation and amortization. What is this depreciation and amortization? Once again, let us see into the working note with explanation. Depreciation will appear on fixed assets. Depreciation will appear on fixed asset, that is tangible assets. Tangible assets. When the asset value reduced on tangible assets, that we call it as the depreciation. Let me repeat once again. When the asset value decreased on the fixed asset, that is on tangible assets, we call it as the depreciation. And when the asset value decreased on intangible assets, we call it as amortization. For example, depreciation on land and building, plant and machinery, furniture, motor vehicles, all put together, let us assume 20,000 rupees. And goodwill written off on 5,000 rupees. So therefore 20,000 plus 5,000, you get the total is 25,000. Put together, I'll give the note number 5. Note number 5. How much you get? 20,000 plus 5,000, 25,000. That let me write it into depreciation and amortization. Note number 5, 25,000. I hope so that you can understand that. Overall total revenue we got 3,50,000. Out of total revenue, first one is cost of material consumed 10,000. Purchase of stock in trade 20,000. Changes in inventories, that is opening stock minus closing stock, we get 30,000. Employee benefit expenses like salaries, wages, staff welfare expenses, provident fund, encashment of leave salary, all that put together 30,000. Finance cost is called as the interest. And depreciation and amortization, depreciation on tangible assets, amortization on the intangible assets, put together 25,000. And last one, seventh one is the, all the serial number also it is written for understanding purpose, it is not must, but with the serial number we will remember everything it is. And seventh one, we have the other expenses. What are the other expenses will appear? N number of expenses will appear. For example, other expenses, what is the note at present is there? 5 is there. I'll give the note number 6 for this. I'll concentrate on rent paid 1,000, advertisement 500, repairs 500, bad debts 2,000, trading expenses 200, stationery, printing and stationery 300. Like that, n number of expenses will appear into this other expenses. Total we have got 1,000, 1,500, 2,000, 4,000 and overall 4,500. So other expenses, total number 6, expenses note number 6. That let me show it is into note number 6. Let me show it is into the other expenses 6. I'll take here, it is 4,500. Now I should make a total of all these. Total 10,000 plus 20,000 plus 30,000 plus 30,000 plus 10,000 plus 25,000 plus 4,500. All that what we get, we call it as the total expenses. The total we get here, it is 1,29,500. This 1,29,500 you should deduct from the total revenue of 3,50,000. Therefore, minus 3,50,000 is equals 2,20,500. The amount what I get is called as 2,20,500. That is profit before tax. Assuming now 30% is the tax on this 2,20,500. Let me calculate 30% of the tax into 30%. 66,150. 66,150. If I minus from 2,20,500 is equals 1,54,350. This is called as profit after tax. Profit after tax. Yes, this problem I have worked out with the imaginary figure with explanation, so that it was a little lengthy video, but my next explanation on this will not be the so much, because the problem will be in small to understand. Thank you very much for watching this video.